Assalamualaikum and good morning for everyone. Today we will learn about interim financial reporting on MFRS 134 and also operating segment in MFRS 8. So, who want to start to explain briefly about MFRS 134? Anyone?
Me, teacher. MFRS 134, Interim Financial Reporting. Interim financial reporting is a financial report that are prepared for an interim period. It is shorter than a full financial year. It can be done quarterly, bi-monthly, and semi-annually. MFRS 134 is not a mandatory. It only required set up of minimum content of report. It also provides measurement and recognition criteria. The objectives of MFRS 134, it enables the users to evaluate the entity's financial position and performance on a continual basis. It can also make the financial market more efficient, which means the prices fully reflect all the available information.
Thank you, Faiza, for your explanation. Next, let's move on to the next question. Can you guys identify the two significant events and transactions in the financial reporting? Anyone to explain?
Let's move to the question 2, which is two significant events and transactions. Number 1 is reduction of holding company debts. Axiata Group Berhad reduced its holding company debt by 8.9% to 2 billion ringgit Malaysia, indicating active effort to deleverage its capital structure. The reduction in debt has several important financial implications. Number 1, improve liquidity position. Lower debt obligation means the company has more flexibility in managing short-term needs and operational funding. Number 2, reduce financing costs. With less outstanding debt, interest expenses decrease, which directly improve net profit and cash flow from operating activities. Number 3 is stronger balance sheet. A lower debt to equity ratio enhance financial stability and may improve the company creditworthiness, making it easier to access funding in the future. And the last one is positive investor perception. Investor and creditor generally view debt reduction as a sign of prudent financial management and lower financial risk. Number 2 is SL Axiata and Smartfren merge. Axiata Group Berhad complete the merge between SL Axiata and Smartfren in Indonesia. Following the merge, SL Axiata is no longer a subsidiary but is reclassified as an associate. This transaction significantly alters how the investment is accounted for and reported. Number 2 is impact on financial statement. Revenue and expenses decrease due to deconsolidation, replaced by a single line item, share of result of associate. Number 3 is ownership structure. Reduce stake to loss of control but continue significant influence. And the last one is strategic implication. Potential synergies, improve competitiveness in Indonesia, and a shift in Axiata regional strategy.
Good job, Eman, for your explanation. Next, in this MFRS 134, we also want to learn and identify the interim reporting in the interim reporting financial position. So, did you guys know the two interim reporting? Okay.
Let's move to question 3, which is the interim financial reporting. The interim financial reporting period for Axiata Group Berhad are prepared in accordance with MFRS 134 interim financial reporting, which requires the presentation of condensed financial statement for period within the financial year. For the statement of financial position, the current interim period is reported as at 30 September 2025 with comparative figures as at 31 December 2024 to reflect the most recent annual financial position for the statement of profit or loss and other comprehensive income. Performance is presented on a quarterly basis, such as July to September 2025, compared with the same quarter in the previous year, as well as on year-to-date basis from January to September 2025, compared with January to September 2024. Similarly, the statement of cash flow and statement of changes in equity are prepared on a year-to-date basis, comparing the current period from January to September 2025 with the period in 2024. This approach enables users to access both short-term quarterly performance and cumulative financial performance throughout the reporting period.
Good job, Aiman. So let's move on to the MFRS 8. Nina, can you explain briefly about what is MFRS 8 and also what is mean of CODM?
MFRS 8 requires company to disclose information about different business segments so the users can understand how the company operates. An operating segment is a part of company that incurs expenses, earn revenue, has separate financial statement, and is regularly reviewed by the CODM. New business segment can also be considered as operating segment even if they have not received or earned revenue yet. However, headquarters are not considered as operating segment. Next is Chief Operating Decision Maker. This is a person or group that are responsible for allocating resources and evaluating segment performance. CODM is not always one person. It can be the CEO, Managing Director, or Board of Directors. For example, in Axiata Group Berhad, the CODM may be the CEO or Board of Directors. However, for YTL Corporation Berhad, the CODM may be the Board of Directors or the Managing Director. In short, MFRS 8 helps company report segment information based on how management manage the business.
Let's move on to the next question. Can you guys know about two segmental report and also the two key benefit of segmental reporting? It's okay, I will explain the two of segmental report and the two of key benefit of segmental reporting.
Next, I will explain about the segmental report of Axiata Corporation Berhad and YTL Corporation Berhad. So, I will start with Axiata Corporation Berhad first. The business segment of the group represent the core business and geographical location of the key operating company based on operating result regularly reviewed by the board of directors. The business segment of the group are as follows. First, in the digital telco refer to the segmental based on countries in which the key operating company operates the reportable segment and principally engage the provision of mobile services and other services such as provision of interconnect services, sale of services, and others. Next, infrastructure segment operates in difficult geographical location, resource allocation decision, and business performance that's shown as a business unit by board of directors. Next, the segmental report of Axiata Corporation Berhad just not only in the business segment, but also in the geographical location segment of group. In this type of segmental report shows that the total non-core assets are determined based on where the assets of core business and geographical location of the key operating companies. Non-core assets exclude financial instruments defined under MFRS 9 and different taxes in 5 different countries comprised of Malaysia, Bangladesh, Myanmar, Philippines, and Pakistan. Let's move on to the YTL Corporation Berhad. This group has 6 reportable segments based on geographical location, which is construction, hotel operates, segment and building material industry, management services, and other property investment and development utilities. Management monitors the operating result of operating segment separately based on these 6 reportable segments for the purpose of making the best decision about how resources will be allocated to assess performance. The business also have other types of segmental reports such as major customer. This major customer represent that the customer have 10% and more than total revenue, which is the company is required in MFRS 8 to disclose when the company have achieved the total of group revenue is equal and more than 10%. Moreover, the revenue from the customers comes from segmental of power generation that shows the company have decreased in the revenue in 2025 compared to the 2024 due to the several factors. For example, we can see in the Straight News Business Times states that the revenue of YTL Corporation Berhad decreased due to the lower performance in the telecommunication business, which is this factor also give impact and risk for the company. Next, let's proceed to the key benefit of segmental report company. To presenting the key benefits of segmental reporting, I will choose Axiata Corporation Berhad as an example to explain on how segmental reporting reflected to the key benefits. First of all, segmental reporting specifically in business segment will increase the performance analysis across business unit. It is because since Axiata Corporation Berhad has operates more telecom and digital business, it can help to the comparison of which the segment of business have a good performance. In addition, it also can help the investor to identify which segment drive profitability. For instance, in digital segment of segmental reporting business, especially CelcomDigi sustained revenue with steady integration process, it is because CelcomDigi has delivered performance in the third quarter according to year-on-year revenue growth due to the prepaid and enterprise segment. This is evidence that show digital segment is the best segment that makes business perform better.
The second key benefits of segmental reporting is based on geographical information. It provides significant benefits to users of financial statements, particularly in evaluating the performance of a company across different regions. For instance, companies such as YTL Corporation Berhad and Axiata Group Berhad disclose revenue and results according to geographical segments. This allows the stakeholders to identify which regions contribute most to overall performance. This information helps investors and analysts to assess the market opportunities and risks in specific locations. For example, Axiata's operation across multiple countries enable users to compare performance between markets such as Malaysia, Indonesia, and other Asian regions, highlighting the areas of growth or decline. Similarly, YTL's geographical segmentation allows the stakeholders to understand how its diverse operation perform in different countries. In addition, geographical segment reporting enhances transparency by showing how external factors such as economic condition, regulatory environments, and currency fluctuation impact each region differently. This enables better decision making as users can evaluate the sustainability of earnings and the company's exposure to regional risk. Overall, geographical information in segmental reporting improves comparability, supports strategic analysis, and provides a clearer picture of a company's global performance.
That's of all for our class today. Thank you for your cooperation and have a nice day.